in general, any tariff, any tax is generally not a good thing for the markets, right? We have inflation and jobs data this week, but the reality is since Tuesday, markets are hardly reacting. My name is Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue, and our goal every Thursday is to bring to you the market news, the data, the trends that we're watching, and hopefully weed out a little bit of the noise here along the way. And again, we have a lot of data to unpack this week with really since Tuesday, not a whole lot of market movement, although between there has been, but not a whole lot of market movement. And I think that it's maybe in anticipation of the Fed meeting coming up to maybe get a little more clarity on exactly where we go from here. So last Friday, before the holiday weekend, we had income, spending, and inflation data all come out. Income, we showed up 0.3%, slightly more than expected. Spending was basically right in line with expectations. It was up 0.5% from the prior, and also, up slightly from the prior month as well. And PCE index, or measurement of inflation, was up 0.2%, right alongside with core being up 0.2% as well. So honestly, not a whole lot to write home about here. All these data points are extremely important, especially as we focus more on the impact to consumer in all of this and how inflation is or is not coming down, which certainly seems to be kind of stagnating a little bit at a much lower level, which is good to see. But nonetheless, there wasn't a whole lot necessarily in here. And then we had the Labor Day weekend, of course, so a short trading week, but we started out with a bang and a pretty big pullback on Tuesday. Maybe in anticipation of how this translates to what the Fed might be doing. But honestly, ever since then, it's been pretty calm in the markets. And even with quite a bit of data on the jobs front, it's kind of supporting the fact that, maybe there's some challenges in the labor market and the Fed may ultimately cut rates here in September. So just yesterday on Wednesday, we had JOLTS data come out and job openings were down quite a bit. Job openings at 7.7 million. And then today we had the ADP employment report come out, well below expected, showing only 99,000 jobs added for the prior month. And you've heard me say this if you follow this weekly here quite a few times, that we've kind of always taken this with a bit of a grain of salt and paid more attention to the non-farm payrolls number. But after the jobs data discrepancy from a couple of weeks back that we had highlighted, the reality is that the ADP employment report actually, I don't want to say it was more accurate, but nonetheless gave us a better glimpse into what was actually happening. So certainly important to kind of see what this translates to as we get into the non-farm payrolls number tomorrow. So definitely tune in next week. We'll cover non-farm payrolls. That comes out tomorrow. We also have the unemployment report and then CPI and PPI. So again, inflation all next week as well. Before we break for this week, though, we had a really great question of the week, basically all around the impacts of all this tax rhetoric from the presidential race. So to be clear, I don't want to get too far into the weeds, and I'll share why here as we wrap up. But I do want to highlight a couple of the more headline newsworthy, tax stories that are out there on both parties, and talk a little bit about what it ultimately, what to watch for. All right. So let's start on the Harris side of the campaign. Harris is basically suggesting an increase in corporate tax. And then there's this idea of potentially taxing unrealized capital gains as well. So what I will share on this front is, as you might imagine, these both could be some challenges to the economy. The corporate tax, obviously increasing that would affect profits at the end of the day. And therefore, it might be the case that investors are not willing to pay as much as they were, given that profits could be lower. Now, obviously, corporations will find ways to find profits either way, and very likely, could offset this over time. But in terms of a knee-jerk reaction, we could see that. The unrealized capital gains one is also really important. And again, I'm going to talk about why maybe take this all with a grain of salt here at the end. But the unrealized capital gains one, if that does get through, could have some pretty serious impact, right? Obviously, a big reason people invest is in terms of the return that they get for investing. And if we find out that that there's unrealized capital gains applied to this, it disincentivizes some of that investment is maybe a good way to think about it. So this also could have, some market impacts and may determine where money flows. Maybe that's a good way to think about these different tax tax strategies that are out there, or being thrown out there, maybe is a better way to say it, is when these things do get implemented, it's important to understand that money will flow to where they can find the best after-tax return. So in this example, if that were the case, we might see money flow out of some anyways, out of traditional investments into something that might be more tax favorable, or whatever the case might be. All right, and then in the Trump campaign, there's a couple things. He's talking a lot about eliminating taxes on tips, and in general, reducing taxes. So generally speaking, again, that can be actually a good thing for the markets. It's more money for consumers to spend, essentially. However, to be very clear, what he is suggesting is that to offset that there would be tariffs in order to offset some of the tax cuts. Now, what I will highlight is same thing in terms of investment and where money goes. In general, any tariff, any tax is generally not a good thing for the markets, right? Call it, politically, call it what you want, and certainly, everybody has their opinion there. But in terms of market performance, in general, a tax or a tariff is not a good thing. So to highlight the tariffs, I will share that this obviously would have some impacts as well. In this example, if there are tariffs, especially for China or whatever it might be, you can imagine that money might shift in terms of where it goes, given how some of those tariffs impact imports, exports, all the above, right? So there's negatives to both sides. Let's just put it that way, right? We're talking about taxes and we're talking about tariffs, and both of these have negative impacts in general on the markets. Now, please, I mentioned take all this with a grain of salt. And the reason I share that is because regardless of what is being thrown out there right now as the race heats up, the reality is, the question, I guess, is, will this actually come to fruition? And I might suggest especially some of these bigger pie in the sky type of tax laws are very unlikely to actually get carried through at the end of the day. Maybe there's some kernel of something that does get carried through into law from this, but it'll depend on the House and the Senate at the time as well. It's not just about the president. And again, we all know how this goes. When a presidential race heats up, there are a lot of promises and a lot of different strategies thrown out there in order to get votes, and whether they actually take place or not is a whole separate story. So again, I will highlight maybe the high level version of this is, in reality, if either of these were to get carried out, there's definitely some negative impacts. It doesn't mean that means there's no hope and there's no opportunities that come out of it as well, but certainly some negative impacts to be aware of. However, the chance of these more extreme versions of this getting carried through might be a little bit lower until we at least see who ultimately is elected and how the House and Senate shape up as well. So I hope that is helpful. I thought it was really great question here to address this week. Be sure to tune in next Thursday. We'll be covering, again, non-farm payrolls, unemployment, and inflation. In the meantime, have a great weekend. Enjoy the sunshine, and we'll see you next Thursday at 3.